Good morning and welcome to the Money Control live stream. You are watching Markets with Santo and CJ. Well, it seems bulls have taken hope heart from yesterday's recovery, and after snapping a 6-day losing streak, it looks like we are in for a second consecutive day of gains on Dalal Street. But, well, today is all about something else, right, Santo?
Well, I would say that CJ, of course, today is all about the LIC listing, but I would say that, bulls should not get their hopes too high, right? If you look at the way market opened very strong and then gave up much of its gains towards close, it's very clear that, we are in a bear territory at the moment.
But Santo, it also made a very handsome recovery after dipping just into the negative territory yesterday and then recovered almost to go towards the day's high. So I would not give in hope so quickly. If you look at the XGX Nifty futures on the Singapore exchange, they are indicating a modest positive start for Dalal Street this morning, but largely because of the handsome gains the US stocks had seen overnight. But today is about LIC and whether that can be possibly a mood changer for the market. A good listing could really lift the spirits not only of retail investors but other investors in the market. But a bad listing, could that be already priced in terms of sentiment?
Well, CJ, even if let's say LIC does list at a good premium, I don't think it can make a very dramatic difference to market sentiment right now, which is very cautious. So you could see probably market hold up for a day, but it's very unlikely that on a sustained basis you'll see the market moving higher from here. There are too many tailwinds at this point, or too many headwinds at this point in time. If you look at sustained FI selling, interest rates, global liquidity crunch, I mean, none of these factors are new. We've been speaking about it, all throughout. But these are big factors that can't be really ignored at this point, and they will continue to limit upsides. That's what I feel, CJ.
Well, if you talk about the IPO in specific, the grey market premiums are indicating that we are probably going to have a muted start at this point of time. The discount was around ₹30 to the issue price of LIC, so that does not really bode very well for in terms of changing the market's mood. But you never know what can happen from right now till 10 o'clock when the listing will happen.
CJ, was there a big fluctuation in grey market prices?
It was, because when the issue had opened for public subscription, the grey market premium were actually quite decent. We were looking at probably a 15 to 20% listing gains. But of course, since the issue has closed, we have seen a very, very choppy market. We have seen almost 6 days of selling that has happened. And given that LIC also has a lot of equity investments, market has taken a very cautious view of LIC itself, given that possibly it will also face bit mark-to-market losses on its embedded value, which something that Macquarie in its note today highlighted, that LIC actually could be a direct play on the equity market instead of the life insurance business, largely because why? Because a large chunk of its embedded value consists of the mark-to-market value of its equity market investment. So therefore, Macquarie ended up saying that a 10% crack in the domestic market could reduce the embedded value of LIC by as much as 7%, whereas for private sector players, it only hits them by only 1 to 2%. So that is something that probably the market has also factored in the grey market premium, given the almost 5 to 6% correction that we have seen in just the last week.
Well, with that, we'll take a look at the stocks that are on our watch list this morning, starting with Bharat Forge. A good set of numbers from the company, and it's also set to benefit from the recovery in the domestic CV space, commercial vehicle space, as well as strong export demand. And also its new segments such as defense, railways, e-mobility is expected to drive earnings in the days ahead. And according to brokerage house UBS, its defense business is on the verge of takeoff, and there could be some revenue surprises there if the company manages to close a couple of orders. So this is one stock you should be keeping an eye out for.
Santo, Bharat Forge's defense business has been taking off for quite some time, so I hope this time UBS is right. But talking about the business per se, one of the limiting factor for Bharat Forge, of course, has not been the demand that it has seen in the export market, but largely the production issues that a lot of its clients are facing. We know that semiconductors are not available. We know that there is a labor crisis in markets like Europe and US, and therefore a lot of the auto manufacturers there have not been able to ramp up production to meet demand, and that has affected Bharat Forge's own ability in the export market. And I feel since that semiconductor crisis has not yet been sorted out, which the management also pointed out, it could be a limiting factor as far as production upside is concerned for Bharat Forge. Now, even if you look at on the valuation front, it's a tiny bit expensive compared to the other auto component players in the market. And I feel that there are other players, other stocks available in the auto ancillary space which are probably cheaper than Bharat Forge and have a more domestic oriented tilt than an export market oriented tilt. And given that I expect that auto sales will recover going ahead in FY23 and FY24, Bharat Forge for me probably would be a distant second to some of the other more domestic oriented auto ancillary companies. Apart from that, the stock in itself is not really exhibiting any momentum. Yes, yesterday it rose 5% following the earnings print that came out. But if you look at the a bit of a longer term picture, the momentum has been very slow, and it clearly shows that investors are not really interested in this stock, and neither am I. One stock that probably could drive interest, well, Bharti Airtel. What a performer it has been over the past 1.5 years. It has totally turned the table in the telecom sector after the sort of pressure it saw from the entry of a new player back in 2016. Now, this later today, the company will come out with its Q4 numbers, and well, Santo, the net profit estimates are suggesting that the company could register the highest profit it has seen in nearly 10 years, or more than 27 to 30 quarters. That goes to show the improvement that Bharti Airtel has made. Going by estimates that Money Control had polled, PAT is likely to double on a sequential basis, whereas the average revenue per user, which is a very critical metric for telecom companies, is expected to rise as much as 9% on a sequential basis, largely thanks to the tariff hike that the sector has taken. Now, the stock remains the numero uno pick for analysts across the board within the telecom space, and is something that I'm also betting on, although it has seen a little bit of a slowdown in momentum. But from a 1 to 2 year perspective, Bharti Airtel is just a no-brainer in the telecom space.
Well, CJ, I think that there's sometimes contradiction. Certain stocks, you say that, maybe those stocks will do well in 1 to 2 years, and that's why you wouldn't want to touch them right now. And certain stocks, you say that, probably you're looking at them.
There is no contradiction. There is no contradiction. You have to be convinced of the story, right? Certain stocks do not even convince me about the story, neither in 6 months or in 1 to 2 years. Certain stocks, they may not convince me in 6 months, but they do convince me in 1 to 2 years. And Bharti Airtel is definitely one of them.
So, here's the thing that Bharti has its strong points, but here are a few things that I would be a little worried about in the short term. Now, if you want to invest in telecom sector, there are just two stocks, really good companies. There are two. One is Reliance.
You're looking down upon Vodafone Idea investors.
Well, you know what the shape of the balance sheet is in right now, and it's a bargain hunter's pick more than someone who's really going by purely fundamental investing. Now look at Bharti Airtel. It's a well-known story. Because of that, it's over-owned at this point in time. Just about everybody is into that stock. So how does it climb from here? Now, already it has moved up quite sharply over the last 1 year. It's been consistently outperforming Nifty. Now, secondly, tariff hike is one of the major stories for the telecom sector. They've been able to do it, but now, rural sentiment is not all that great. Rising inflation, which means that telecom companies will not be really able to push through hikes. Okay, that's the other point. Thirdly, Bharti Airtel may have to take on more debt now, since it's bidding for 5G, and that is expected to kind of add to the debt on its portfolio, which means that servicing will become a problem. And rising diesel prices, which means that higher costs of operations for the telecom towers. And lastly, your favorite argument, all the technical indicators right now are flashing red. According to Money Control Pro, clearly the technical indicators show a very, very bearish sign.
Well, that actually counters your argument that it has become the most crowded trade. I think it was a crowded trade probably in 2021, but this year a lot of that froth has been taken away from the stock given the overall market correction that we have seen. Plus, as you said, tariff hikes we may not see the sort of tariff hikes we have seen in the past two years, but I still believe by the end of this year we will see another tariff hike, and that is the common opinion among analysts as well. As far as debt is concerned, Bharti Airtel has done well to reduce the debt on its books. Plus, now that the issues with AGR has been sorted out, largely there is less pain on the balance sheet of the company, and therefore it makes it it brings it at a stronger position to maybe take on a little bit more debt to invest in the 5G spectrum.
But more debt, definitely let's not, you reduce debt only to take on more debt. So, you're kind of back to square one, and the very bearish sign probably indicates that people want to sell, but there is nobody to take it off them. Raymond is the third stock on our watch list today. A great set of numbers there. Overall, the sentiment for textile stocks in general has changed, but Raymond's has been steadily climbing. It hit a 52-week high of about 930 last month, and then has seen a sharp sell-off from those levels, and again a rebound seen over the last couple of days. Now, consistent improvement. If you look at the past 5 or 6 quarters, barring one quarter of June 2021, there's been a consistent improvement in its bottom line. Also, for the last 5 years, the compounded growth of earnings has been close to over 60%. Also for FY22, there's been a significant improvement across its debtor days as well as inventory. Good improvement there as well. And lastly, the company also has some plans to tap into the opportunities in the EV space. Gautam Singhania, the boss of the company, had said that last week. Now the company is also into the auto components business. So all this put together makes Raymond a good pick at these levels.
I'm surprised, Santo, that you have a dodgy name on your pick today, because Raymond, while your numbers, the big numbers that you have thrown at my face sound very impressive, but this is a stock that has been a very, very volatile, counter on the street if you look at it from a longer term perspective. Plus, the company is trying to get into too many things at one point of time. Last year the entire story was about real estate and how they have their land banks that they want to capitalize on and probably develop later on, when the real estate story was doing well. Now that the EV story is all the talk of the town, now suddenly the company wants to get into EV space.
But it's a natural fit with EV. See, it's already has an auto component business. It's not as if it is just going setting up something specifically to tap into the EV. And with real estate, the point is that it does have a land bank which it's now looking to develop.
Santo, it just seems to me that the management just lacks focus and probably is just going with what the trend of the day is. And even if you look at it from a governance angle, Raymond has had a very patchy history when it comes to corporate governance, and that has always weighed on the company's valuation, and that will continue to weigh on the company's valuation till the time there is assurance, market becomes assured of the fact that probably these instances will not happen going forward. So for me, given the lack of limited upside on valuation and given the lack of story, narrative or story around the company, this would probably be something that I'll just keep by the side, maybe not get into right now. One stock that I will probably want to get into right now, and probably a space at large, is India Cements and the smaller cement companies and mid-cap cement companies right now, because Adani's deal for Holcim has now lit a fire in that sector, right? There is already reports that the deal could actually kickstart a new wave of M&A acquisitions throughout the cement sector. And if you look at it, India Cements actually could become a very good contender for an M&A in the sector, right? It's a mid-sized player with a decent exposure to some critical markets like South and Eastern India. Plus, it has a very low float when it comes to the promoter holding. Given that promoter holding is not that significant, it makes it vulnerable to hostile takeover from somebody else. Now, given its strong capacity and maybe with a deep-pocketed player like Adani getting in, Street is reading into the situation as possibly an M&A sort of a situation now. And if that happens, then automatically, if somebody is buying a controlling stake, you automatically expect an open offer on the counter. So this is one stock that I would expect to be in the limelight for the rest of the year, if the expectations of the market and what you hear in the M&As in the investment banking space, that cement sector M&As have not yet concluded.
Well, fair point about the sudden interest in second line and mid cap and small cap cement companies because of the Adani Group wanting to buy out ACC and Holcim, but not all companies are the same. Again, if you look at India Cements, it's a pretty big, formidable name. But look at the operating parameters and compare it to other peers. It's been lagging on that, and this has also the reason why the stock price has been underperforming for quite some time now.
Right.
So, purely because promoter holding is low, right?
Right.
does it become vulnerable to a takeover? In many cases where promoter holding is low, actually that may not be the true picture, you know. Otherwise, if that were the only benchmark, many companies would have been taken over by now. So I think the focus more should be on the operating parameters, which right now is not all that great when you compare it with other cement.
Anyway, we have the opening bell now, and the market has opened with a healthy tick on the positive side. If you look at the Sensex and Nifty, both are up higher by about 0.5%. Whereas Nifty mid cap is actually leading the main indices with a gain of 0.7%. On the sectoral front, Nifty Bank is doing quite well. Santo are higher by 0.6%.
Metal stocks are doing pretty well at this point in time. Both Tata Steel and JSW Steel are up by over 1% each. Now, metal stocks have taken quite a bit of beating over the last month or so because of the meltdown in commodity prices. So it would be interesting to see if they would be
actually
able to sustain
Santo,
the
I would expect the metal stocks to make a decent comeback because the news emerging from China earlier today has been quite strong. Shanghai, for the first time for the past 3 days, are actually now reported 0 COVID cases, and it seems that the lockdown situation there could ease. And we know that the COVID outbreak in China has been a big constraint on that economy. And given China's appetite for commodities, if that economy comes back, along with provided the support from the government and the Monetary Policy Authority, metals could be in for a relief rally given the sort of correction that they have seen over the past 6 weeks.
Not so sure about steel, which means that if they start producing steel in a big way,
I doubt that they will start producing it. I think it probably start consuming more because they would want to kickstart the economy largely through investments in the construction sector. So if that happens, then exports, Indian players who have actually made a large splash in the export market to replace some of the Chinese producers, they could benefit in a big way.
And market breadth is pretty strong at this point. Close to 2,000 shares have risen over the previous close. At the same time, less than 300 stocks are down compared to their previous closing levels. And with that, the last stock on a watch list, so it's Bandhan Bank. Good set of Q4 earnings there. Consistent improvement in its asset quality. In fact, net performing, non-performing loan, gross non-performing loans are now down to 6.5%, and it's all the credit costs for Bandhan Bank, which have been quite high in the last couple of years, according to Macquarie, that's likely to normalize. So from somewhere around 5% and even as high as 9%, it's likely to come down to around 3% for this year and the next. Plus, the bottom line of 1900 crore for this quarter has been way above what most market has been expecting. Of course, there's some bit of skepticism as to whether the bank will be able to sustain this performance, and also that the recovery seen in its disbursement, that's also something to watch out for.
Well, true. The skepticism is definitely there because Bandhan Bank has shown these signs of recovery even in the past, right after the pandemic, and those recovery signs fell flat later on. Now, yes, it seems that a bank is on a recovery path, but a lot is now dependent on the execution front, right? What was the fear of the market? It was the microfinance book, right? And it's significant exposure to Assam, which had become a point of contention last year, with the past 2 years actually. And now the management has said that it is trying to diversify its geographical presence out of Assam and maybe into other states, so that the dependence on Assam as a business goes down. Plus, it is also trying to get into different lending products as well, so as to reduce its dependence on microfinance lending. Now, for me, that is a big challenge, right? It is not easy to diversify yourself out of a state which almost contributed 20 to 25% of your lending book. And here the management is counting on its expertise to probably execute a perfect plan, and it will require a big leap of faith on part of investors to continue to bank on the management to actually do it, given the volatile performance that we have seen from the lender over the past 3 to 4 years.
Well, CJ, there's a saying in the market, it is that your returns always depend on the amount of risk you're willing to take. When the story is less known, probably
well, if it's an educated risk, one can make sense of it. But at this point of time, I don't think I can take that sort of an educated risk on Bandhan Bank. I would probably wait it out a little bit and see those first steps, bearing some fruit for the bank, and then probably get in big. But at this point of time, it's a hold for me.
Before we wrap up the show, CJ, a quick question to you. You know, what's been the response among new investors to the LIC issue? Did you hear about many of your friends subscribing to the issue?
Well, most of them did actually. They as I told you initially, they were expecting that there could be 15 to 20% sort of listing gains, so they did wanted to get into it. Plus, the hype around the IPO itself made a lot of people, fear that they were missing out on something big here. And we've seen that in the retail book, almost 12,000 crores of subscriptions came in for the LIC IPO, just under the retail quota. I mean, you can probably add the policyholder quota, and that will, increase that amount by much more, given that a lot of the policyholders are also retail investors. So overall interest, hype around the LIC IPO was quite strong for retail investors, and it'll be interesting to see how they probably behave going forward. If we see a muted listing, whether they will probably be quick to panic and sell out, given that it may not lead to much gains for them, or whether they will hold it for the longer term and see, maybe, believe in the consistent compounding story of LIC that a lot of analysts have been talking about.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Do share your feedback in the comment section below.
And please, follow us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, do stay tuned to moneycontrol.com and the Money Control app. We will see you again at 3 p.m. with all the day's news and action.
Thank you.
Thank you.